Bitcoin has been declared dead more than 400 times. Not once, not twice, hundreds of times. It has survived exchange hacks, government crackdowns, global pandemics, billion-dollar frauds, and some of the largest financial collapses in modern history. In one case, Bitcoin crashed by 99% in a matter of minutes. In another, billions of dollars vanished almost overnight. And every single time people said the same thing: Bitcoin is finished. Yet somehow it kept coming back. So here's the question: why does Bitcoin survive crashes that should have killed it? To answer that, we need to look at the biggest Bitcoin crashes ever, starting with the most ridiculous one, Mt. Gox Flash Crash. June 2011. Bitcoin was still a strange internet experiment. Most people had never heard of it, but those who had were watching the price explode. Bitcoin had climbed above $30 for the first time ever. Then disaster struck. A hacker gained access to an old Mt. Gox administrator account. Mt. Gox handled most Bitcoin trading at the time. In other words, if Mt. Gox had a problem, Bitcoin had a problem. The hacker started flooding the exchange with enormous sell orders. The market couldn't handle it. Bitcoin collapsed from $32 to a single penny. 1 cent. A 99% crash. Imagine buying a house for $300,000 and watching it become worth $100 a few minutes later. Panic spread instantly. Mt. Gox halted trading and rolled back transactions to stop the chaos. Bitcoin survived, but the world had just learned how vulnerable crypto exchanges really were. Silk Road Seizure, October 2013. Bitcoin had developed a controversial reputation. Much of that reputation came from Silk Road, a hidden online marketplace where people used Bitcoin to buy almost anything. Then the FBI stepped in. Agents arrested the site's founder, Ross Ulbricht, and seized thousands of Bitcoin. The headlines were everywhere. Many investors believed Bitcoin's biggest use case had just disappeared overnight. The result? Bitcoin fell roughly 25% in a day. Fear spread faster than facts. People rushed to sell before everyone else did. But something unexpected happened. Bitcoin recovered. The network didn't care that Silk Road was gone. Blocks kept being mined. Transactions kept happening. Bitcoin moved on. The Mt. Gox freeze. Just months later, another disaster appeared. Bitcoin was trading near $260. Excitement was everywhere. Then Mt. Gox came under a massive cyber attack. Hackers overwhelmed the exchange with traffic. Trading froze. Orders stopped working. Nobody knew what was happening. And uncertainty is poison for financial markets. Within hours, Bitcoin crashed more than 40%. The scary part wasn't the attack. It was the realization that one exchange had become too important. If Mt. Gox sneezed, the entire Bitcoin market caught a cold. China's first ban, December 2013. Bitcoin had just crossed $1,000. For early investors, it felt like the future had arrived. Then China slammed on the brakes. The country's central bank told financial institutions to stop handling Bitcoin transactions. Investors were shocked. China was one of Bitcoin's biggest markets. If Chinese money disappeared, what would happen? The answer came quickly. Bitcoin lost roughly half its value. A rally that had looked unstoppable suddenly reversed. Many believed the experiment was over. It wasn't. China's second attack, September 2017. Bitcoin was booming again. Prices were soaring. New investors were arriving every day. Then China returned. This time, officials banned ICOs and forced local crypto exchanges to shut down. Traders rushed for the exits. Bitcoin plunged 25% in only 2 days. It looked serious, but something had changed. Unlike earlier years, Bitcoin was no longer dependent on one country. Trading activity shifted elsewhere. The network adapted, and Bitcoin survived. Again, the futures crash, late 2017. Bitcoin mania was everywhere. People were quitting jobs to trade crypto. Teenagers were becoming millionaires. Bitcoin approached $20,000, then Wall Street arrived. For the first time, major institutions could easily bet against Bitcoin through futures contracts. Days later, the bubble burst. Bitcoin crashed by more than 30%. What followed was an 18-month bear market that erased hundreds of billions of dollars. The dream suddenly became a nightmare, but Bitcoin refused to disappear. Black Thursday, March 2020. The world was falling apart. Countries entered lockdown, stock markets collapsed. People were terrified. Investors sold everything they could, including Bitcoin. On March 12th, Bitcoin fell nearly 50% in a single day, one of the largest crashes in its history. More than $1 billion worth of leveraged positions were liquidated. Some exchanges struggled to stay online. For a moment, it looked like Bitcoin had finally met an enemy it couldn't beat: a global crisis. But only months later, Bitcoin began one of the biggest rallies ever recorded. Black Wednesday, May 2021. Bitcoin was breaking records again. Then Elon Musk shocked the market. Tesla announced it would stop accepting Bitcoin payments. At nearly the same time, China intensified its crackdown on crypto mining. The combination hit like a freight train. Bitcoin dropped around 30% in just hours. Billions of dollars in leveraged bets were wiped out. Mining operations across China shut down. The media once again declared Bitcoin dead. The obituary didn't last long. The Celsius collapse, June 2022. A new type of crisis emerged. Crypto lenders had promised users enormous returns. One of the biggest was Celsius. Then it suddenly froze withdrawals. Customers could no longer access their money. Panic spread everywhere. Bitcoin fell sharply. Confidence disappeared. The event exposed how interconnected the crypto industry had become. One company failed, everyone suffered. The FTX disaster, then came the crash that shocked the entire financial world. FTX wasn't some small exchange. It was one of the largest crypto companies on Earth. Its founder, Sam Bankman-Fried, was considered a genius. Politicians praised him. Investors trusted him. Celebrities promoted him. Then everything unraveled. Reports suggested that customer funds had been misused. Withdrawals surged. FTX couldn't keep up. Within days, the company collapsed. Bitcoin crashed. Billions of dollars vanished. Trust evaporated. The scandal became one of the largest financial fraud cases in recent history. Once again, people declared Bitcoin dead. And once again, they were wrong. So let's go back to the question we asked at the beginning. Why does Bitcoin keep surviving? Because almost every major Bitcoin crash had one thing in common. The thing that failed wasn't Bitcoin itself. It was the people around it. A hacked exchange, a criminal marketplace, a government ban, a lender, a billionaire, a fraudulent company, a pandemic. Every time the price crashed, but the Bitcoin network kept doing exactly what it was designed to do. Every 10 minutes, another block. Every day, more transactions. No CEO, no headquarters, no off switch. That's why Bitcoin keeps surviving events that would destroy most companies, banks, or financial products. The real question isn't why Bitcoin crashes. We already know the answer to that. The real question is, how many more times can the world declare Bitcoin dead before it finally stops believing it?